And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, and making money doing all those things. Hopefully, if we keep our fingers crossed and work hard at what we are doing as traders, then we'll make money. At least that's my belief. It's been my belief for many years, even when I was blowing accounts and stuff. So I haven't blown a live account in a long time, but I do blow prop firm challenges, and who knows, we could see some of that today. But then again, hopefully not. First, I want to remind you that if you like this video, then hit the thumbs up button and like the video. And if you want to see more of these videos, subscribe to the channel, and you'll be notified of when I put out more of these, which is pretty much every day. Lastly, if you want to talk to me directly, then hit me up in the comment section, and I'll be happy to reply as soon as I see that I've got a comment. It might take a little while though. I'm very busy. Let's see what's going on now. I guess now, since we're talking about putting money at risk, let's go ahead and talk about the risks. And here are the risks that you can have when trading Forex. First, this channel is for educational and entertainment purposes only and does not constitute financial or trading advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and see what's happening today. First thing that's happening today is this is tradingforexforprofit.com. This is my platform that I'm building right now to help traders become better traders and make more money doing such that, win more prop firm challenges and stuff like that. Not I am going to be the first customer using the platform for just such things, we'll be testing out the hard way very soon. We're not quite ready yet. We do not. Although the pricing is set up, we are not accepting. Oh, where'd the buttons go? Oh, they're on the pricing page. There they are. The buttons don't work right now. That one does. This one does not. This one does not. I need to make this go live again so I can test the payment structure, make sure it works. But that's what's on the agenda for today. In the meantime, let's see what's on the agenda today for you. Let's see. First, let's look at the risk strength-o-meter, which is up here, but from Market Milk and Baby Pips. I'll probably put one of these on my site as soon as we figure out how to do that. Let's see, we have the dollar, the Kiwi, the Loonie, and the Aussie all leading, with the dollar in fourth, followed closely behind by the Euro, Japanese Yen, Great British Pound, and the Swiss on the bottom as weakest currency right now. We have a risk-off. Look at the frowny face. A risk-off environment right now, meaning that we're going to see stocks going down, we're going to see the dollar going up, we're going to see gold possibly going down again, possibly going down. Meantime, let's see what's going on here with the DXY. Here's the dollar index. It is flirting with 100. It's about as hard as you can. There it goes. It just broke 100. So it's we have dollar strength today, and that means probably higher oil prices too. Well, let's get in here and let's find out what's going on with the rest of them. Euro versus the pound. Euro is taking the lead against the pound, right up there at the 20-day moving average. Wouldn't take that on a bet, considering it's also Friday, and you want to move. Kind of want to, I don't recommend holding anything over the weekend unless you're in a long-term strategy and you got very deep pockets, because a lot of weird stuff can happen over the weekend. And for example, here's something that could happen over the weekend. The Japanese right here are hinting that they're going to take decisive steps regarding the foreign exchange markets, which means they need their currency higher. Lower against the dollar. No, higher against the dollar and the British pound. So once I've mentioned 160 over and over again, 160 is the magic number for them to come in and start intervening, and it looks like they are starting to let us know that intervention is coming. So trade the dollar versus the yen carefully, very carefully. Might want to get on the short side of it just to see what happens. It's a trade I'll be willing to take. Put it on the short side and let the good times roll, so to speak. First, let's come back into here. Euro versus the dollar. Now, also, if you're thinking, oh, that's an easy setup, just go ahead and go south on the dollar versus the yen. The market can also jump your position over the weekend. So, although you could have that position, it wouldn't trigger because it opens lower than your position. So, it's not a guarantee that you're going to win on that either. It sounds like a good idea, but the market can actually jump your position. Um, Never actually seen it done, but I think I have once or twice. Years ago. Dollar versus euro versus the dollar. We have it tanking, not tanking so to speak, but it's not going gangbusters right now. It's going down. I do not have a position in that. Actually, I think I do. Yep, there we are. We are losing money on that because I got it a little too soon at 115.40. I'm down 20 pips right now, which is not a huge loss at all. Stop loss is set at 115. Figure if it's going to break 115, then it's going further south. And the big one, it would be 115.15, and I don't have the pockets deep enough to take that all the way down like that. Not going 150 pips out on the euro versus the dollar. Pound versus the dollar. A dollar versus the yen. Look at that doji forming right there. That's pretty. But at any rate, we're starting to see higher highs, higher lows, right across the in the same angle as the other channel that's falling right here. These are just trend lines drawn and then copy and pasted over with the same angle, and the trade is following the angle on that. It's wild how this happens, how it stays within trend lines and stuff. But I would that's the one I'd be worried about right now. If you're long dollar yen right now, get ready for a bumpy road because Japan's about to intervene. They usually do it 2 days after they give warnings. So look for sharply lower dollar versus the yen prices on and pound versus the yen prices on Monday. Let's see if they pull the trigger. Pound versus the dollar, again, staying well within that range, within our little lines right there. Again, coming down about the same way, threatening 133 with a long way to go. 132.23 is the bottom on that. So if you're looking for a mean reversion strategy, you're probably going to wait to get down to 132.15. That's what I'd look for it to bounce or possibly lower. Pound versus the yen, again, flat or been going sideways for 4 weeks. So we'll see if it continues to go sideways or if it comes right down with the with Japanese intervention that's incoming. I say that over and over again. It's not a guarantee that they're going to intervene, but they're pretty good about saying, "Hey, we're going to intervene," and then about a week later, crashing the markets. Euro versus the yen, not crashing the markets, but making it rough, which gives us buying opportunities. Euro versus the yen, again, sideways, been sideways for 5 weeks, so we're not going to be touching that one. Dollar versus the Canadian, seems like a good idea. It's looking like we're going to get a little mean reversion action going on right here, maybe. We get a daily close inside the Bollinger Bands. Go down the 4 hour where I would possibly track that. Did not meet criterion. And I like to see an overbought or oversold, as well as the close above the Bollinger Band and then close underneath it. That would trigger my mean reversion strategy, and that is not it. On the daily, it might. I want to test my EA on the daily, the Canadian daily, and see what happens. Canadian versus the yen, usually tracking the oil markets, going sideways right now as it has for 1, 2, 3, 4, well, the past 4 days. I forgot I'm on the daily charts. Oops. Not really going to be getting into that, especially considering the threat of the possibility of Japanese intervention. Oil, well, it's just all over the place. 96.08 a barrel, not coming. Doesn't look like it's coming down anytime soon until they open up the Straits of Hormuz. Aussie versus the dollar. Looking like a bottom right there. Looking like a good time to come in at 68.93. Possibly. Might be a good thing to do. Gold. Well, broke 4,500, but it's not going up much under 44. Low on that's 43.68 on this candle. Expect that to kind of turn around. Not real positive on the metals right now. And again, this could be the part where they turn around. Always want to keep an open mind when you're trading too, because if not getting married to one position, or else, I mean, it's hard to do. It's hard to stay mentally fit on that, but it can be done. I believe it can be done. Palladium, and I'm not the best at it either. Falling under the 200-day moving average. Look at that. Yep, palladium has fallen below its 200-day moving average. Platinum is not. So expect to see palladium coming down further. Silver, still holding around 68-ish. Seems to be a lot of strong support right there at 68. 67.5, 68. So silver doesn't look like it's going to buckle much more under 68, which makes sense. Let's look at software stocks. Well, they did better yesterday. Look at that. HubSpot's up 3%. Salesforce is up 3%. Still down, way down on the week. Let's look at these charts. Yeah, look at that. Software sector continuing to get hammered. That's the 50-day moving average. That's the 200-day moving average. Wow. And they seem to be finding some sideways ground. Into it. Still into it, customer. Until I build my accounting platform. GoDaddy is right here. Adobe, NVIDIA. There's a lot of sideways going on there. Everyone was screaming NVIDIA's going to be the best thing since sliced bread a few weeks ago, and down 4% yesterday. Upwork, poor Upwork. Could have been a contender. At any rate, that's all we've got today. Let's go ahead and go back up to the DXY. That's where we'll close that out. And that's all I've got for today. If you like this video, again, then hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, if you want to comment to me directly, by all means, hit me up in the comment section, and I'll get back to you as soon as I can. In the meantime, you guys have a great one. Talk to you later. Bye.